Today's market call is presented by CME Group, where risk meets opportunity, and FactSet, financial data and analytics powered by tomorrow. Monday, November 11th, Veterans Day. You know, it's an odd thing to say Happy Veterans Day because obviously many tens of thousands of people have perished in wars overseas. But with that said, a respectful Veterans Day to everybody out there that served our country. Dan, how are you?
Yeah, I'm right there with you. Thank you for your service. Guy, we got a day here. You know, it's one of those days
Every day. Every day is a day.
I was gonna say, why is the market up? And you were gonna say
because it's open. Although as we're sitting here, you know what's funny about it is the S&P. Listen, I'm only looking at through today, but the S&P is effectively unchanged. And now you're seeing this dispersion between the Dow, which, you know, I know is sort of, we don't talk about it, and the NASDAQ, which I think continues to be fascinating. But your point is well taken, Dan. I mean, why is the market higher? Because it's open.
Yeah, and again, it was higher, and now we're at the lows of the day in the S&P. So it's interesting on a day like today, just, you know, we've had this monster rally over the last few trading sessions starting last Wednesday after the election. And, you know, at some point you would think that this back and fills a little bit, but we're going to look at those charts. Guys, should we look at the rundown?
Throw it up, because Amanda, this is you and Amanda at your finest. First shoe to drop S&P versus NASDAQ, as we just sort of teased. This is not me. I've never used this expression in my life. I happen to be one, but nerd gold versus the shiny metal. I guess nerd gold would be the Bitcoin.
Correct.
Big tech rotation. And if we have some time, which we will, a little audience Q&A, Dan.
Yeah, no doubt. Let's just get to it right now. Let's look at those S&P futures, Guy. If you look and see what the high for the day was, you see that, you know, we're pretty good here. Like if you just look at how many handles are we off the highs here? Maybe like 54.87 was the high, and here we are at 54.57. So, you know, I'm looking at this guy and I'm saying to myself, okay, you know, it was kind of goofy if you wanted to get in front of this on Wednesday. Maybe you wanted to see what the follow through was on Thursday, but it feels like it's kind of petering out a little bit. Let me get your take on that. What do you think?
Well, I mean, it feels that way without question. Of course, the problem with that is, as you all too well know, I mean, every time that it has petered out, it's only lasted a day or two. But there is some level of exhaustion, I think, going on. But I also couple that with the fact that you've seen some pretty large volume days. So the exuberance is not only around the market, it's manifesting itself in the participation in the market, which historically can potentially mark a high on the exuberance level or the low in terms of sort of the capitulation level when people say no mas. So we'll see how it plays out, but I think you're right to bring that up.
Yeah, and we're not going to do a trade here. I want to look at the NASDAQ futures, and that's where I kind of want to lean into a little bit. But I guess if you were looking to kind of sell them, you know, if you were looking to sell them, let's go back to the other chart for a second here, the S&P. If you were looking to sell them, you might think about, you know, that uptrend that's kind of been in place, but the first target would be that breakout. And I just want to be clear here. I had the levels. Go back to the S&P for a second. Yeah, I had the levels incorrect here. I was just looking at this. It's 60.37 was the level here. And if you're looking to sell at 60.37 and kind of play for that exhaustion, your first level would be that breakout that we had on Wednesday, and that gets you, you know, down to 59.30 or so, Guy, and then that uptrend is kind of like 57.80. But you look to use a pretty tight stop, maybe somewhere around 60.55. I'm not there yet. What do you think of those levels in general?
I think you're exactly right. I mean, the first level would be where we broke out from that line job, as we call it, to the upside. So that's the first level of support. The next level comes in at this sort of short-term uptrend that we've drawn, which, you know, over time decay with this trade, with this line going higher, you're right, 5780 to 6,000, depending upon where you go. And then the ultimate level would be the 150-day moving average. Now, if we were to sort of broaden this out just a little bit, Amanda, if we could, and do instead of the static chart, do a real-time chart, you'll see that 150-day moving average would also potentially be the third point of an uptrend that's been taking place for the last year or so, if you wanted to draw that line. So that's the way I look at it, Dan, and I think you're spot on in your levels and the way you're looking at this.
Yeah, and again, it's one of those kind of situations where I can't really see anything in the near term while you'd go back and test that 150-day. Like if you think about what investors are kind of focused on here is, further tax cuts as it relates to, I saw a stat earlier. Let's just say we go for a corporate tax cut down to, from 21%, let's say down to 15% or so. I don't think they're ever going to get there, but I saw an estimate that would add 4% to S&P 500 earnings. So it's not that huge one way or another, right? And maybe that stat is a little off. Let's look at the NASDAQ 100 because we're going to spend some time looking at the divergence, as you said, between semis and software here. This is interesting to me, Guy. It had that one big move. It closed right at that prior high. It followed through on Thursday, but it's really just consolidated in the next couple of days. Now, the one thing I'd say is if it's trying to establish a new range above those prior highs, this is what you'd want it to do, kind of back and fill.
Mm-hmm.
You'd find some sort of catalyst, but this one also sets up interesting. What do you see in the S&P E-minis 100 versus the S&P E-minis NASDAQ 100? The S&P is a 500, sorry, but versus the NASDAQ 100 here. Like, do these look like slightly different charts to you?
No, they are different charts without question. And I think the more vulnerable of the two, if you're asking me, which you are, is the NASDAQ mini. So, here we are here. We're right up against that prior high. And, you can look, you can say a bit of a double top. We've broken out, but I think the reality is we are going to back and fill back to that prior high that we saw this summer, and then we're going to have a conversation. So I look at this and say, you know what? This is the one that potentially could be vulnerable, especially if you think, and this is part of the conversation, that yields are going higher. So the one that looks more tradable to the downside is probably this one.
Yeah, and I agree with that. And what's different to me about this than the S&P futures is that that breakout level from Thursday. It's just we're just a whisker away from that. So here's the trade I want to set up here. If I want to take a shot, I like doing it through the futures because I can set a stop here, Guy. I want to set the stop just above today's high, but I want to look to sell at 21,209. My initial target would be 20,400. So you see that's about 800 points to the downside, and I'm stopping it up 130 or so. Let's go back to that chart for a second, just so you can kind of get a sense of my levels there. That 2,400, it's right at that uptrend, right? And so to me, I just think that that's probably where you'd take a pause. If you get this thing back below that breakout level, you'd look to basically lower your stop. Maybe that comes in the form of 21,000 and you continue to lower it as it goes lower.
Yeah, we talk about that all the time. You sort of the trailing stop. If you're right, immediately a trailing stop gives you the opportunity to sort of mitigate whatever the loss is. And that's obviously a bit of a high class problem, as we say, but that's how you have to sort of trade this thing. And, again, I'll go back and say in terms of this NASDAQ chart, if you want to go back to sort of that January 6th of 2023 low, there is an uptrend that's been in place for quite some time. Amanda can draw that line. And you can see potential if we go to a non-static chart where the ultimate level of support should be. So, the first level is this trend line. This is obviously in place since August, shorter term. The longer term trend line is a little bit below that. And quite frankly, like many things, it probably comes in the form of the 150-day moving average. And your eyes can see that trend line as well as mine can see. From that sort of January low, you start connecting dots, and that's where your ultimate support level is going to be. It's actually below the 150, but you see what I'm looking at here, Dan.
Yeah, no doubt. And then let's just look at the volatility. Let's look at the VIX here, because this one, I would have expected with the S&P at all-time highs to maybe be a bit lower here, Guy, but it's kind of held in here in the mid-teens or so. So again, it's not telling us anything that the S&P is not telling us, but it may suggest the fact that the way people were hedged up into the election, given the uncertainty, obviously a lot of that move to the upside is maybe folks taking off those hedges and letting things run. But it also might be the sort of situation where after 4 or 5 days of just straight upside, you're looking to put some other protection on that. All that being said, a lot of seasonality taking place here. And essentially, like I said before, I can't imagine the news in the next kind of month and a half that would kind of take the markets down materially.
Yeah, no, and again, nor can I, but that doesn't mean it's not out there. And, the volatility move surprised me. But in retrospect, I guess it makes sense. I think part of the vol trade in retrospect, although we did talk about it, was the fear that maybe the election would not be decided within 24 hours or so, and this thing would be prolonged. And I think people bought protection or bought volatility in the face of that, and it didn't manifest itself. So that trade obviously was over. And I think as quickly as people got in, they're getting out. With that said, I don't think the vol trade is necessarily over, to your point. I mean, it's hard to imagine from now until the end of the year something taking place that would send vol higher again. But, oftentimes it's unimaginable what typically happens. And it's only with the benefit of hindsight that we talk about it. So I actually think before the end of the year, I think there's a very good chance. When I say very good chance, I think, 75 to 80% chance we revisit the high 20s, low 30s in the VIX.
Yeah, and let me take us in a different direction here. Let's pull up the CME Fed Watch tool here. And so, heading into the November meeting last week, there was a near certainty that they were going to lower interest rates 25 basis points. It'll be interesting to see, Guy, if what happens to this December 18th meeting here, right? If they look to pause, maybe you see a reacceleration in inflation. You also have the anticipation of tariffs and tax cuts and all that sort of stuff might be deemed inflationary. And, if you do start to get a sense for that, you might have a situation where, they pass on the December meeting. And the other thing is, and I'm just curious what your thoughts are. There was an article in the Wall Street Journal today, and we know Fed Chair Powell was asked a couple times at his meeting last week about what happens if, President Trump, when he takes over in January, tries to fire him. And he said, basically, they're going to combat it. And, this takes us all the way back to 2018 because the Fed started raising interest rates, trying to normalize interest rates right after they was low for so long. And then that's where a lot of this conversation about, moving Powell out because, Trump really wanted him to lower interest rates. So you have to assume that on the path that Powell was on, he was pretty happy about it. Yet, if we start to see, slowing in the economy, unemployment pick up, inflation readings getting higher, it's a push and pull about what the Fed is supposed to do in that environment.
Yeah, you talk about the unforeseen things. That's something that's clearly out there because the way with which Jerome Powell answered those questions was rather, I don't want to say combative, but he was clearly prepared for it, and it was somewhat terse. So I say that because he's clearly dug in, and I think he understands that other than firing him for cause, which is the only way a president can fire a Fed governor. By the way, the Fed chair is considered to be a Fed governor under that amendment. I think it's the Fed Act of 1935 or something. They can be fired for cause by the president. Now, what cause is, I don't know. I don't think it falls under the purview of, though, not lowering or raising rates at the demand of the administration. So that's going to be a tough one. So it's going to be hard to get rid of him. Now, behind closed doors, who knows what's happened? But I think Jerome Powell wants to see it through. And I think, if you know better than I do, but I think his term ends sometimes in 2026. So he's in here for the long term. And, I said it again, I want to be clear. I'm not a fan of the Federal Reserve, although I will tell you, and I've said it on Fast Money and on our show, that I think on the margins, Jerome Powell has done a pretty good job given the hand that he was dealt. But I think I want to say something. I think it's really important to understand that he's dug in and he's going to do what's right vis-a-vis the information that he has and the data that they get. And it might not be to the liking of the incoming administration. And therein lies potential for some volatility.
Yeah, and again, it's that uncertainty. Trump had kind of signaled during the campaign that he would like to have greater influence on the Fed and their kind of, course of lowering or raising interest rates. And I think that's the sort of thing that investors will not like. It's a level of uncertainty. We go back to what Liz says all the time. Is Powell wearing a purple tie on the day of, there's certain things, there's certain tea leaves that investors like to get, and not too different than, I know you don't like this, but there's a couple folks over the last 15 years who basically had the opportunity, this is at the Wall Street Journal, to kind of get a little preview of what the Fed might or might not do, and that's just kind of floating a bit of a trial balloon. The one thing I'll just say, Guy, and I think you got to keep a close eye on the dollar, and I
100%.
get why the dollar moved after the election, but if the Fed is really on a course to continue to lower interest rates, you would not think that the dollar is where it is at 105.50 or something like that. It's banging up right against that downtrend from those levels, I guess, back in the fall.
Yeah, and this is going to be the interesting trade, right? Because, I think most people would want to think that the president-elect would be a fan of a stronger U.S. dollar, which makes sense. I think he's a fan of a stronger U.S. economy. I don't necessarily think he's a fan of the strong U.S. dollar, given the deficits and the debts that we have. I mean, quite frankly, he's the only president in my memory that's actually openly talked about the want for a weaker U.S. dollar and has talked about the dollar being too strong. And, whether that's true or not, it's true in terms of the comments that he's made, but whether or not economically it's true or not remains to be seen. So I think people are going to be surprised at the commentary around the strength of the dollar with this incoming administration. And, there's a chance that they try to sort of talk the dollar lower, which leads us to the next trade, which is both Bitcoin and gold.
Yeah. So the gold, we were talking about this last week, Guy, and in any sort of environment over the last year, rates going higher, rates going lower, strong dollar, weak dollar, gold just kept on doing that after that consolidation that we saw back in the spring. Look at that just steady move. And I know that's something that, you've been pushing the whole time, buy on any dip. And, we thought that if it pulled back, why wouldn't it go to that uptrend, right? Gold trades very technically. I know that you could probably expand on that a little bit. You've traded it for a long time. You traded it for a big bank. But again, it's probably getting close to a level. By the time we get to the CME day next week, if it were to kind of find some support at this uptrend, that would probably be a great level to trade it on the long side using a stop somewhere in and around that uptrend.
Yeah, the trend line can be your stop, or the moving average can be your stop, whatever you want it to be. But to your point, we're traded down to this uptrend line that's been in place basically since the spring, and I do think it's going to be a level of support, and I do understand what's going on here. I think some of it is on it's just a money flow thing. I think you're seeing money coming out of the gold trade into the crypto trade, and that's clear as day if you look at the price action of Bitcoin, which we will in a second. But I also just think it's a fear of, maybe I think part of it is the same way the VIX came off is the same way that gold's coming off. I think part of the gold trade was predicated on the potential for unknowns around the election, which did not manifest, thankfully. So here we are. But the reasons that I've been bullish in gold have not gone away. They've only gotten, I think, larger and more robust. So I think you do buy the weakness here in gold.
Yeah, and again, let's go back to the Bitcoin, because I think you're probably spot on, as just kind of, you took off a bit of that gold because, we didn't have the worst case scenarios as it related to the election, and that's why folks were doing it. People are buying Bitcoin right here because they think it's going to be a better regulatory environment for Bitcoin. So, you look at that, and we were talking about that move from 72 back in the spring down to about 55,000. It was a series of lower highs, a series of lower lows. The thing worked its way back to those highs on anticipation, right? This was one of the Trump trades, if you will, and the breakout just has to do with, I think, a little kind of FOMO by a lot of folks looking for things as the market broadens out a little bit, finding different risk assets. And again, this is one that you would not think is acting this way with a strong dollar, right? And so again, especially as gold's selling off a little bit. But here's one, Guy. Here's one of the only risk assets that I see that the strong dollar is kind of hitting a little bit in a meaningful way, and that's crude oil. And you tell me, does this have more to do with a strong dollar? Does it have more to do with what OPEC Plus is saying? Does it have more to do with, people being uninspired by Chinese stimulus? But, it's getting back to a level here that we've traded from a bunch of times, whether it was bouncing off that support or selling it at that downtrend.
Yeah, and I think I'll add one more. It's all of the above, unfortunately, and I'm not trying to duck your question, but I'll also add the fact that I think part of it is, I don't want to say hope, but a thought that, in this incoming administration is going to put an end to the conflict in the Middle East. I'm just saying that in terms of what the people are thinking about, and they're going to force Ukraine and Russia to the negotiating table and maybe put an end to that as well. So some of the uncertainty around those two things, I think the market is saying are going to be cleared up within the first whatever of the incoming administration. Whether or not I agree with that or not it doesn't make a difference. I think that's what the market is looking at. But you've correctly pointed out that every time crude oil has rallied, it's been less and less meaningful to the upside. You have a series of lower highs, basically, I want to say since last summer, basically last fall. And here we are again. The support is well documented, but the more and more we sort of test that support, the more likely we're going to break down to the downside. What's interesting, though, some of the big cap integrated names have actually hung in there. So there's also this decoupling between the underlying commodity and some of the equities around it.
Yeah, no doubt. All right, let's go to the stock market, guy. That was a nice little macro wrap here. The thing that sticks out to me on my main fact set board here, guy, is
Hmm.
this rotation out of
Look
Mag
at this.
7.
Look at this. Who
I know
did
it's a
this?
great
I
chart.
mean,
Amanda did, of
that's
course she did. And
amazing.
then a rotation out of semis. Now the semi story we'll talk about in a second, but look at that move into software. Salesforce, oddly, and you would have thought Microsoft was the number one weighted stock in the IGV, the ETF that tracks large cap semis. But look at this move today on Taiwan Semi. And so it's the Commerce Department basically making some demands that Taiwan Semi not sell high-end GPUs to the Chinese. And, one of the things that I find so interesting, Guy, is that how is it that the Chinese chip manufacturers, the folks that design these GPUs, are so far behind the US? We talk about this sort of tech battle that we have with them. It's just very curious to me. And I guess the point that I make is that, think about this. If the US is able to say to Taiwan Semi, don't sell chips to China, and we've been talking about potential for aggression of China towards Taiwan, I can't imagine that makes this whole situation that much better.
No, and listen, I mean, it's not just me saying this in terms of this trade. I mean, again, you go back, I want to say a year and a half or so ago, Jensen Huang from NVIDIA talked openly about his concern of potential for something to happen between China and Taiwan. And, I don't know the exact terms that he used, but he was very concerned about that potential. Now, I say this, and again, maybe these are negotiating techniques and, the bark is worse than the bite, but it was recently, I think, incoming President-elect Trump talked about Taiwan having to pay for some of their protection against potential aggression from China. So, there seems to be a stance of some laissez-faire stance when it comes to Taiwan potentially out of this incoming administration, which I think is concerning for this trade. So part of this, I think, might be predicated on that as well.
Yeah, I guess the more likely, in my opinion, situation would be the new administration forcing Taiwan Semi to really dig in and build some fabs, or more fabs in the US.
Here.
They've obviously
Yeah.
built one, in Phoenix. So that'll be interesting to watch. But it's, the stock's getting hit today. Mag 7 underperformance other than Tesla. That's its own thing right here. Let's just look really quickly at the SMH. It's been consolidating here. We know that NVIDIA and Taiwan Semi make up, 30% or so, maybe a bit more of this. So maybe it's not a perfect ETF, but, it's kind of stuck. That 150-day has been support. But, guys, this is the one, and we've talked about this on Market Call, that this one looked like it was about to break out. If you were looking to broaden out the trade in the NASDAQ away from the semi outperformance, this area made sense. We saw Salesforce and Adobe and Workday. Some of these ones really trailed here. And so look at that breakout. I mean, that just tells you that investors are just buying. Anyone who's short was covering. And I just think the relative outperformance of the semis is very notable.
Well, I mean, this is one that I don't think enough people are talking about. And by the way, this is one that I looked really smart about, but post earnings, not so much. Throw up a Qualcomm chart, Amanda, because, in the aftermath of their release last week, the stock traded higher. And it certainly felt like to me, given some of the things that they said and given the valuation, the Qualcomm was going to make a push towards that prior all-time high that we saw this summer. That did not happen. We traded up to the 150-day moving average and stopped and failed. And now look at how poorly it's traded since. Now, Qualcomm is a big part of that SMH as well. And you have a flattening 150-day moving average that's slowly rolling over. And I don't think enough people are talking about, what is Qualcomm, if anything, telling us? So I know we get focused on Taiwan Semi. We should. NVIDIA, we should. But Qualcomm might be telling its own story right now as well, Dan.
Yeah, I think one thing built into their guy is, this rumor that they might try to buy or
Yep, 100%
Intel.
Yep.
And they said they're going to wait until after the election. So that would be something that, let's just say they make a bid for them. It's going to be in regulatory hell for a long time. And they probably don't do it until, there's some sort of clarity around Lena Khan, who runs the FTC. She's clearly going to be out here. So again, that's one. I like Qualcomm here. I like the valuation. I like the potential positioning if they were to do a deal with Intel, but that wouldn't close in a very long time. So again, that'll be an ARB hell if it does happen. Last thing before we get to a couple questions, Guy, let's look at the Home Depot reports tonight. The implied move in either direction is 3.5%. This one had a monster move, over the last few months off the August lows here. It kind of sold off. Maybe that had to do with the rates going higher. Talk to me on this one, and then we want to look at the chart. Maybe if they could pull up a 5-year, because I know this has caught your eye.
Yeah, well, I know what you're going to bring up. You're going to bring up the fact that we just traded up the levels that we saw. I want to say December of 2021 or January of 2022. Either way, we're trading up to those prior highs and seemingly rolling over here. So that is concerning without question. So you were right to bring up that chart. What's also sort of interesting here is, what do higher interest rates mean? And what does the potential for the unemployment rate to start to tick higher mean as well for the Home Depot trade? So I look at this and say, you know what? What is the implied move, Dan? I want to say it's
3.5%.
8%, 3.5%.
3.5%.
Sorry about that. Yeah, I think that 3.5% is going to be to the downside. So I'm not suggesting you should trade Home Depot into earnings. That's never something we really talk about. But I think more risk is to the downside in this, in not only the Home Depot trade, but sort of the home builders trade in the aggregate.
Yeah, and the last thing I'll just say about Home Depot, and we say this all the time, valuation not a great timing tool, but earnings growth expected to be like mid-single digits, sales growth low single digits, trades 27 times this year, 26 times next. I mean, as far as the retail space, yeah, there's some that are getting kind of expensive, whether it's the TJX, which always trades that way, Costco, Walmart. But this one seems expensive without a whole heck of a lot of growth. And there's a number of potential headwinds, which you just, spoke to a little bit. So this one just doesn't make a lot of sense to me.
One of the questions we're getting, and this is from Flitch, I think that's right, is about ASML. And the question is ASML ? And we've talked about this on this show and on Fast Money. And I brought up the fact that, look at how poorly the stock has traded since this summer, since July. I mean, the stock, Dan, is almost been cut in half. It's probably down 38-40% from that all-time high. And I think what's going to happen here is we're going to test the levels that we saw in the fall of last year, sort of 580 or so, which was a low back in October. So it's not a great comp to the semi trade because ASML is ASML specific a lot of times. However, this is still a $250 billion company, and I don't think you can underestimate the importance to the overall tech sector, Dan, Nathan.
Yeah, and we talked about this about a month ago when they gave that guidance. It was just horrible on their bookings. And so is it, a canary in the coal mine for this, semi trade for the near term as it relates to, high-end GPUs? So again, good question. We'll continue to monitor this one because, we're going to have NVIDIA's earnings next Wednesday, and that's going to be a really interesting one because, again, it's been a series of massive outperformance, relative to expectations. If that starts to slow, people look at the rotation we're seeing right now. And if they give guidance that's less than expected, you are going to see, further downside weakness in Taiwan Semi because they manufacture 85% of these high-end GPUs. And then NVIDIA is just such a crowded trade. So that's one we'll be keeping a close eye on, guys.
And you started the show by saying, you're hard-pressed to understand or to think about or to come up with some of the scenarios where the market could move to. That's one of them, is NVIDIA next week. Yeah. This is from Bevan Shirley. What does the strong U.S. dollar mean for other countries' currency? Does it go down? All right, so this is why I brought up, again, President-elect Trump, because I think he understands probably almost better than anybody that, if you owe somebody $100, you have a problem. If you owe somebody $1 million, they have a problem. So when your debt right now is approaching $34 trillion, it's not us that has a problem, although we do. It's the people that we owe the money to. They have the problem. So what's going to wind up happening is, I think, they're going to try to inflate their way out of the problem that they have. And how do they do that? By making the dollar less robust, to use a word that I used earlier in the show, to depreciate the value of the dollar, because that helps assuage some of the problems that, again, a $35 trillion debt's going to have. So what does it mean? It means I think this dollar strength is going to be short-lived. I think the dollar is going to start to trend lower. And I think, again, going back to gold, all roads lead back to gold, Dan.
All right. We covered a lot of ground here, Guy Adami. You and I are going to be back here tomorrow with CBW. You know what? I almost said CDWC, the computer reseller, but it's really,
I love that. It's my favorite
CBW, Carter Braxton worth. He's going to help us chart all of this guy. I thought we did a good job on the charts, by the way.
We can navigate the charts. It's not like we haven't done it before. I mean, Carter's obviously in the Parthenon in terms
He's
of
the
where
GOAT.
he
You know what GOAT
resides.
stands for, guy? You know what GOAT stands for?
The GOAT. He's a GOAT.
Greatest of all time. You got
You know, I see that now they have commercials with that, and everybody can't be the greatest of all. By definition, everybody can't be the effing greatest of all time. Okay.
Well, really quickly,
we throw these things around like, you know, like nickels.
Before we get out of here, so I was talking to a couple 20-year-olds. They're big sports guys. They play football in college, and you know they're on the socials and everything like that. I, for some reason, in my Instagram feed, get lots of Michael Jordan compilations. Maybe they just know how old I am. Let me tell you something. There's no argument to be made for LeBron versus Michael. When you see the stuff that he was doing back then, no one can do that in the NBA right now. He was just dominant. He was the man.
You think about the NBA again. I don't want to necessarily go down this rabbit hole. Michael Jordan was playing an NBA where basically you would get mugged if you tried to bring your ass into the paint, and he did it on a day in, day out basis. He played every friggin' game. He played hard every game. Not only was he obviously a freak on the offensive side, but he was all defense probably every year that he played in the league. There is it's Michael Jordan and everybody else. And quite frankly, if you were to ask LeBron, I'm sure people have asked him, nobody wants to compare themselves to Michael Jordan because there's no friggin' comparison. You're starting an NBA team and you can pick anybody you want. You start with him and build around it.
Matter of fact, there might never be anyone as good as him and created the dynasty in and around him. All right, all that being said, I'm sure you guys don't care what we have to say about the GOAT conversation between LeBron and Michael, but I think you can tell where we sit. All right, Guy, we're out of here. That was really it was a nice little half an hour.
I enjoyed it. Listen, YouTube, Risk Reversal page, subscribe, Market Matrix, year 27. Check it out. We'll be back tomorrow, Dan.
All right, see you.